If you want to learn how to scale your futures day trading to a point of where you can make an average of $1,000 per day, this is the video for you. Alright, what's going on, traders? Welcome back to another video. So today I want to share with you guys some trades that I took last week and how I ended up my week plus $5,000, and also share with you guys that you don't need to be catching the very top of the markets and the very bottom of the markets to be making a good consistent living day trading gold futures. Now, for you guys who are maybe new to the channel, what's going on? My name is Aaron. I've been trading for 5 years and been documenting my journey here for about the last 3 years of me traveling and trading around the world. I also go live on YouTube every Tuesday to Friday. If you want to join in and watch me day trade these gold futures live, then I hope to see you on the streams. If you've never traded gold futures before, do not worry. If you traded gold in the currency CFD markets before, amazing, I'm going to share it with you guys. And for the people who have traded gold, you know that gold can move very, very well. And for me, when I'm trading gold now, I'm only really aiming for 10, 15, 20 tick moves. And that on gold is absolutely nothing. You can get that in 1-5 minute if you trade in a session of high volume. I'm going to share with you guys a trade that I took on Thursday, which was a very nice bounce off a very simple support, understanding simple liquidity, and more importantly, executing the trade. The key to your guys' success isn't having the most fanciest of technicals and 100 different confluences. It's about keeping your price action simple and actually executing what you have initially planned out to do. If you have a nice level of support and resistance on gold and you say to yourself, when we come into this level, I'm going to do this, but when price comes into that level, you start to think of every other reason as to why you shouldn't take that trade, then hopefully this video is going to open your guys' insight to the fact that the more you start executing, the more money and more consistency you're going to be able to make from trading gold. So I will show you guys the trade that I took on Thursday and give you guys a little bit of technical analysis and breakdown kind of how gold moves and how I like to day trade gold. So in the most simplest of terms, when trading gold futures, you have to understand that it moves very, very different to everything else, and you'll either love it or you hate it. I personally love it. I love trading gold futures more than any other market on the whole entire futures exchange, which, you know, for people who trade in futures is maybe a little bit more rare. I think a lot of people who trade futures maybe just trade the NASDAQ. For me, gold has been my baby for the past 3 years, and moving into futures, it's just become even better. So the way that I like to trade gold and the way that gold moves is 90% of the time, if gold's going to have a next big move up or down, it's always going to come and liquidate some previous highs or lows before having that real move. So if you guys just look at this chart here, you know, gold was in this range, and when gold's in these ranges, you can catch great trades. Look at that. You come up and grab the highs, come up, you grab the highs, exactly the same thing to the lows, and this is how you guys see me breaking this down on stream. You grab the lows, you push higher. Exactly the same thing here. You grab the lows, you push higher. Exactly the same thing here. You grab the highs, you close above, break back below, fake out, you drive lower. Exactly the same thing here. You grab the highs, you drive lower, and each of these moves, you know, if you take this grab down into this support, 40 ticks. If you trade this fake out, you maybe wait for the break back below, you short from here back down into this support, 30 ticks. If you take the shorts, you know, break back below, these retests from this down into the range, 50 ticks. Here, 30 ticks. You know, these bounces too aggressive off news, but 50 ticks. Catching just 10 of that is a very, very small portion of the move. And if you can consistently pull 10 ticks out of the markets 2-3 times a week, you can change your life. And that sounds like crazy, you know, it's only 10 pips. You do it consistently, you scale your trading, I promise you that's more than enough. You do not need anything else. So that's how gold moves, and that happens on all time frames. Doesn't matter if you trade the 1 minute or the daily, gold is always going to come up, liquidate previous highs or lows before having a real move. If we take a look here on gold, so when we jumped on the London session on Thursday, we jumped on when gold had already had this pretty nice move down pre-London. And I unfortunately didn't get to catch this move down, even though it would have been absolutely textbook. You have this double top, people jump in shorts here, stops above the highs. Once price flips back bearish, you guys know the intraday gold trading strategy. If you haven't watched the video up here, you short once price flips back bearish, you catch this move down, there's your 30 ticks, potentially you done for the week. But I didn't get to get that move. It happened at 6:35. I don't usually trade at 6:35 London time. So when we came into the London session, the interesting thing about gold is on the 30-minute time frame. And if I just replay this before people go, he's in the replay mode. Yeah, no shit. I'm showing you something that happened in the past. If you notice before this move down on gold, for the past 1, 2, 3, 4, 5 30-minute candles on gold, we hadn't liquidated any highs. And we already know, like I said, if gold's going to have a next continuation back down, you know it's going to pull back and liquidate some previous 30-minute highs before potentially either having that move back down or just completely push them back to the upside. Who cares? But we'll catch it up. In the London session, I was marking out for the guys in the community all of these 30-minute highs and basically saying, if we get rid of this, because that was around my entry point, they're basically saying, you know, from these regions, if we can start to get some reversal formations from here, up into these previous highs, this high here, 17, amazing. This high here, 25, amazing. This high here, retest these levels, 30, amazing. That's all we need. I'm not even going for 30 pips. If I can get 30 tick runners, beautiful. And we also had this level of support up here. Does that mean you just want to be jumping in longs because you think that's going to push up? Obviously not. You have to wait for that confirmation. And the confirmation for me here on gold was, again, another amazing reversal formation of a nice Morningstar 3-pin pattern formation where, like I say, if gold's going to have the next, move back up, it's never just going to be one tap of resistance and straight to the moon. It's going to come back down, re-grab the lows one more time. But as long as the candle doesn't break below the last low, then amazing. The bearish momentum isn't still in the markets and I can look to take that trade. And what I mean by that is, if you guys look at this support level here, gold found some support in this 30-minute time frame. If gold's going to have a push up, it's going to come back down and re-grab the lows. But as long as you don't close below that low and you respect that low, you respect that intraday 5-minute level of support, this can be a nice confirmation for you to take gold back to the upside. And another amazing formation on gold, which I won't go into too much detail, is having this Morningstar formation. You have the initial wick, you have the liquidity wick, and then on the third drive, that's the retest entry. You respect the previous low, you come back down, you test the original low, and then that's when you can be looking for that play back up. And this is a formation. I traded on gold 2 times this week, and that was nothing compared to the amount of times that it actually came up. And when you're trading these liquidity plays, when you come back down for the retest, your stop loss can go below this low. Because if this is going to be a true liquidity low, you don't want to see that broken. But if that low gets broken, then there's the possibility that you just keep pushing down. You don't want to go sit in drawdown. So that's the stop loss placement. Now, if I just, and I screen recorded this entire thing, I'm trying to get better at screen recording whilst taking trades, but taking my trades is my priority. But if moving forward, if I can screen record more trades and share it with you guys here on YouTube, I'll absolutely do that. So I screen recorded it as we were kind of a little bit into the position, but just so you guys can see my entry, I got long on gold from 1927.2, which is after this 30-minute closed down here. So after this 30-minute close like this next 30 opened with an instant bottom wick. So if I go onto this, you've got this nice left shoulder, this is the head, come back down for the right shoulder, amazing, that's my long opportunity. So my entry is at 1927.2. Now I didn't jump the gun too early here. I need to see a reaction out of these levels. I don't just jump in this straight away. Like I say, if it breaks back above and retest, there was actually a nice entry there. I didn't get that entry. I wanted to see a little bit more than this before looking for this play back up. And this is like around 9 a.m. London time. So if we just skip this on a little bit more, amazing. There's that nice push up. There's the retest, came back down for a little bit more of a range. Came back down. We hadn't yet on the 30-minute time frame closed bearish. So any of this intraday noise, I'm still looking for longs based off that 30. Amazing. There's the push. There's my confirmation. And that's all I waited for. And then my entry was based off price coming back down and retesting these levels, and my stop loss originally was just down below this low. The great thing about this entry was we were also creating some upside liquidity here. You got this double top, so basically I already know that if price is going to have a push back down, we're going to grab these highs. So if as soon as we grab these highs, I can start minimizing my risk, amazing, that's what I'm going to do. So there's my entry, price came back down, retested the prior highs, and then spiked up into them highs, and at that point, my stop loss goes below that low, risking $600 and letting me just pretty much see how price goes. Amazing. Once you've cleared that structure, I'm break even on the trade straight away. We've broken the structure. If we come all the way back down to my entry after having liquidity grabs, we don't need to be in this trade. If I just skip this on, go back to the 30 because we've now had that 30 closure, you guys can now see how nice that 30 closure was. That's the low, that's the liquidity grab, that's the retest of the initial wick, and then there's the drive. So even if you didn't take it on an intraday 5-minute time frame, you could have pretty much just been buying off the break of this high and back up into them highs. There's your 10 ticks. So that was my entry. And as price was pushing, because this is just an intraday trade for me, and as price was pushing up, I was actually jumping on a one-to-one call with one of the members in the community, and I was kind of managing this whilst being on the call. And my stop loss was at break even. I had 50% of my position trailed at 1927.6, which is above this high here. My other entry was trailed at 1928.2 was taken out for my first position at around 10 ticks. You know, I had locked in the 10 ticks. If it had kept pushing, amazing. But you guys can already see we liquidated the first 30-minute high and had an initial reaction off that level. That's why these levels are so strong. And this is just very simple price action. I don't have any fancy indicators, any fancy terminology. It's just simple price action and understanding how gold futures move. As this position got taken out for 10 contracts and we had a pretty strong reaction, this is then when I then started to trail more aggressively the rest of my position, because it was looking like we would come back down for a deeper retracement before potentially pushing higher. So if I just skip on the actual trade, so there, yeah. So that position got taken out for a pretty nice, like just over $1,000 gain after taking all of the positions and, you know, trailing the last 2 contract at break even. And then I ended up taking a few more positions when gold then came back down for some more retest and, you know, gave all the opportunities to come right back up into every single one of these highs. Now, in this little play, I actually trailed my last 2 contracts at like this low, and it actually just took me out before pushing back up. But that, you know, the last little 2 contract runner would have actually been a great position, but it's fine, you know. I took another entry, you know, the overall analysis to come back up, re-grab these 30-minute highs, retest this level, completely played out. Came back down and then just kept pushing up. We had some news. And then boom, gold slammed all the way back down and coming and re-grabbed all of them lows. And this was just a very, very, very simple 3-pin pattern, morning star formation, hadn't liquidated any 30-minute highs, come back up, retest this support, 36 ticks in that little move back up. And I ended up closing the day up on gold after fees and commissions around $2,300, which is, you know, trading 10 contracts around 23 ticks. It's like from here to there was all I needed to be able to lock up in the day $2,000. And if you guys just catch, you know, I probably caught the hardest move of the day. That was the craziest thing. I didn't even get the cleanest drive of the day. I got the little retest, kind of a more aggressive entry. If I had got these entries at my normal times, man, that would have been like 60 ticks, $6,000. That's my week done. And I just want to make this video to show you guys that you don't need to trade 1,000 different instruments with 1,000 different confluences. You just need to master your one instrument, and that for me is gold futures. Previously, I was doing a little bit of gold, a little bit of Nasdaq, and trying to do too much when I come back to what I know works well for me and what I've traded the most and how I know what moves. That's gold futures. And trading gold futures, 10 contracts, 10, 20 ticks, net profit 2 to 3 times a week. Amazing. That is literally all you need. You could end the week up on gold, just net 10 ticks. With 10 contracts, that's $1,000 a week. You don't need a huge account to be able to trade like this either. You know, my risk on this trade was like $300. $300 to make like, you know, what, over 2,000 or 1,000 in this little scalp? Amazing. That's literally all you need. So I hope this video inspires you guys and opens your guys' eyes to day trading gold futures and really mastering your craft, and understand that, you know, you don't need to be buying at the top and selling at the very bottom and trying to be the first one in and out of the markets all the time. You wait for price action, you wait for confirmations, you take a little partial of the move, you can live a very good life. That's it. Key takeaway, 10 ticks on gold, 2 to 3 times a week can change your life. Fuck all the other expectations you had and all the other things that, you know, 10 ticks is nothing. I'm showing you and I'm telling you it's amazing. It's all you need. All right, I'll see you guys in the stream next week, every Tuesday to Friday. Like, subscribe, all that good stuff. I'll see you on the next one. Peace.